Yo, what's up? This is Tino. Welcome to this channel. So in this video, I'm going to explain the power of imbalances or fair value gaps, that is FVG, in the forex markets, right? So to start with, let me just explain what an FVG is, right? So if you look in the forex market, you realize that at some points our market is not going to be balanced, right? Our market is going to leave these gaps in between three candlestick, right? A set of three candlestick, right? If you look from this very candlestick that we had, this bullish candlestick got a bearish candlestick, right? So from this candlestick, right, 1, 2 and 3 candlestick, right, there is a region that we have that we don't see any wick, right? So imbalance or FVG can be easily defined as a no wick region, right? So basically FVG can be defined as a no wick region, this region that doesn't have wicks, right? This region that doesn't have what? That doesn't have wicks. That's the simplest definition that we can use, right? So what actually happens in the forex market when the market leaves these FVGs, right? The market usually comes back, right, and closes these what? And closes these imbalances before it continues in the direction that it actually wants, right? So the market should be balanced. If you look at this very region, we are full of wicks. The market is balanced there, right? So this is the way that price should always move in the forex market. Whenever they leave these FVGs, right, they should always come back and close these imbalances, right? So that alone gives us an edge in the forex market. If you look at this point, price left this region that is actually marked in this green color, right? This is actually given by the indicator that we use, right, that I explained in that video, right? Then what I'm saying is, when they leave these FVGs, price actually has to correct. In this case, they corrected to this zone. They didn't close all the FVG, then they went down, right? Then eventually they came and closed that FVG and they went down like that, right? So price always closes this FVG, right? So I'm going to show you how you can use these imbalances, right, or FVGs to take your trade entries, number one, and number two, how to take profits, how to use imbalances or FVGs to take your profits when you are trading, right? I believe you've understood what an FVG is, right? So if I zoom a little bit for more examples, this is another FVG, this is another FVG, right? So you shouldn't actually strike, you shouldn't actually worry yourself by trying to identify FVGs, right? Our indicator straight away, it gives you those FVGs, it gives you those imbalances, right? So don't struggle much, just refer to that indicator and you get to learn of that FVG, right? Okay, so this is actually a trade that I actually took today, right? And I'm going to break it for you and explain how I go to take that trade, taking advantage or utilizing imbalances or FVGs that we see in the forex market, right? So to focus on, the moment you see your market breaking previous low, having in PMS or BOS, right, we actually know that we intend to move or we're continuing in the downward direction, right? So what you actually have to focus on is the last impulse move that we have, that happens to be this move. That's where your focus should be on, so that you predict where you're going to take yourselves, right? So all the way from this point to this side, you are looking for the points where you have imbalances. So let me close this like this and I will explain, right? Okay, so from there you are going, or you are supposed to focus, number one, on this imbalance that we have there. No need of you doing that indicator just gives you, so you just go straight to it, right? So you actually knew that your market has to close that, number one, right? Then number two, it also had to close that, right? So if you're going to consider a sell, you're going to take sales that are going to come above this high and above that high, right? Why am I limiting myself to that? But we have other imbalances that are actually sitting there. We have them 1, 2, 3, 4, 5, right? But of interest, let's start with this one, right? There was an imbalance there, there was an imbalance there, right? But what the market actually did, they came, they closed that imbalance, they also came and closed that imbalance. So that makes this order block to become a mitigated order block. So this order block was mitigated, so we're not going to use it. It's no longer a fresh order block. Then we also had another order block that is sitting there, right? And it is an imbalance below it, which means it was a high probability order block to be used. But of interest, the market actually moved down, it came back, it closed that imbalance, it closed that imbalance. So this order block was also mitigated. So from here to there, to the highest point, we no longer have any fresh order block. That allows us to reduce our impulse move to this one, right? We are looking for the fresh one, right? When this imbalance, market moved down, came and closed that one. With this imbalance, market moved down and came and closed that imbalance, meaning that we are now taking our impulse move to this point, right? So this is where we have a fresh order block that actually broke this previous low, a fresh order block that caused a market structure shift or a break of market structure, right? And just below that order block, for now, let me start with the rest of the order block, like I explained in the previous video, right? That this is our order block. It also took a little bit of some liquidity from this candlestick. I think you can see that clearly, right? It took some liquidity from this blue candlestick, right? Then below it we have imbalance, right? So we also prefer order blocks that has some imbalance or that created an imbalance after them, right? So we know for a fact that our market should actually come into this zone, right? So the first risk that we're supposed to project, right, was a risk on this whole range, right? But remember, this is gold, right? Remember, this is gold. So I can't actually risk all that. That is too much risking 80 pips there. I can't actually risk that one, right? So some might actually ask and say, wasn't your trade supposed to be here? No, it was supposed to be here, right? Why? Because there was some imbalance that was actually left there. Let me show you that imbalance, right? And I'll explain why I reduce my risk to that, right? So if you look closely to this zone, if you look closely to this zone, right, they came and they closed this imbalance, right? This imbalance to this point, and they left. Let me actually show you. It's here, right? And they left some imbalance there. If you look here, they didn't actually tap that gray zone, so it means there's some imbalance that they actually left there. Let me just make sure that I line there, right there, right? So there is a small gap that is there, so that would actually make me to suspect that my price still has room to come to that zone. So I wasn't tempted yesterday to actually get into this sell. I had to wait for my price to actually close that imbalance, right? Then also remember, I said I analyzed from H1, 4 hour, and the daily time frame. So there is need for you to step to the lower time frame. So what are you going to do? You're going to step to the lower time frame, the first lower time frame that we go to confirm your setup or to reduce your risk from this whole range. The smaller range is M15. So you go to your M15. So I went to my M15, then straight away I went back to my supply zone, right? So that actually made me to reduce my risk to this a very order block that I'm seeing there, right? So my risk was reduced to this one, right? But that wasn't good enough for me, right? But if you want, you can as well take the trade from that range, right? You can wait for a confirmation in this range, meaning that your risk could have been something like this, meaning that you're going to be risking something like 54 pips on this trade, right? But because I've taught some deeper concept on how to catch some sniper entries, how to analyze your supply zone for you to take some sniper entries, right? If you refer to this video on this channel, you're going to learn that I explained a concept of institutional candles where I said that if you see a candlestick that takes liquidity, this one, right? Let me limit that. Let me increase this. Let me increase this. Then let me come here so that we focus on this, right? If you see a candlestick that is going to take liquidity from this side, right? There was some buy stops liquidity that was taken with this week. So if you see a week taking liquidity from that, right, you can actually reduce your risk to that zone, right? You take, I said, you take your risk from this high, right? Then you count only 30 pips to any point or to a region above this week or just to that week, 30 pips from here to there. I explained this concept in that video, right? That is in this channel, right? So this is what I actually had to apply today to reduce my risk. So that made me to actually come on my risk region. It actually made me to come on my risk region, right? These are concepts to sniper entries. You never see this anyway, right? You can only see this in my mentorship, so it's more like a peep into my mentorship course, right? So you reduce your risk to just that from there, because that's where they manipulated. So they want to tap the zone of manipulation, right? So they came fast and they tapped that, and you will have your limit order there, right? You have your limit order, they induce you into the trade, then you are in the trade, right? Wow. So if you can check the risk and the progress of the trade from there to this region, you realize that already it is achieved a risk ratio of 1:5. If you are risking a dollar making $5, $10 making $50, $100 making 500, 1,000 making something like 5,000, right? So that was a very, very good risk ratio for intraday traders, right? But for me, I'm still swinging this trade. Why? Right? That's where I'll explain the other concept of FVG. So for an end, I've explained I'll use that FVG or imbalance to take your entries, right? Price had to close this imbalance that is also here, right? So now for my targets, the first swing target that I can actually consider for this trade comes to this point, right? Comes to this region, because if I look at this impulse move that I got there, there is some imbalance that is lying there. There's an FVG there, there's an FVG there. So my price actually has to come and close that FVG. So the best of this trade that I can get as a scalp trade is something like 166 pips. That is too good, that is too much, right? But this trade, remember, I took it from 1 hour time frame, so we have to go back to the 1 hour time frame and we look at other imbalances that we have. So we're going to realize that there is some imbalance that is still sitting there. So that imbalance can as well be used as a target. So I'm going to use that imbalance as a target. So if I'm going to use it as a target, I just go slightly lower than it or where it ends there. So this will act as my target as well, and will give me a target of something like 238 pips. That is too good for a trade. Risking 17 pips to make 238 pips, that's a very, very good risk reward ratio. So this is how I take my week entries. If you go to higher time frames, you will actually realize that we have a whole lot of FVGs that we have down there, and our trade is still going. I'll explain that, right? So for me to explain that, let me actually give you more information and more insight to what this FVG, or how you can actually effectively use this FVG. So I've explained on the entry, and I've explained on how you use it to take your profits. Okay, let me use H4, right? So if I go to H4, if you go to H4, right, let me just start maybe from this point, right? From this point, right? So we had some demand zone, we had an FVG, got an impulse move, we came, we closed this. After closing that, we tapped that order block, right? We just tapped that order block. After that, we tapped that order block. Then our price tapped that order block, then boom, it went up, right? So this FVG was closed. Then on going up, it left some FVG, right? So the moment it leaves that FVG, we know for a fact at some point that FVG has to be closed. So we go just below that FVG, then we stretch all the way to the right, right? To the right. So this will also give you some predictions in the future of where the market is most likely going to come and bounce, right? So it means it just tapped into that FVG, and it missed to tap this region, right? That order block below that FVG, right? But in the future, look at it, it just came, tapped that zone. So you could have gotten a buy just because of this FVG and the order block that is below it, right? Order blocks that are actually below an FVG or imbalance, they are highly profitable, right? They're highly profitable. They're going to give you some crazy trades from there, right? So from there, we got some FVG there, and our price moved upwards, right? So after leaving that FVG, you just look at the order block that is right there, right? So here they came, they mitigated that order block below that FVG, and they went up, right? Straight up, right? So this is how this concept is very, very accurate, and it gives you crazy profits, right? Then their price went up, right, with some FVG, it was closing, right? Then let's come to this point when we go to the reversal of the trade that we actually take, right? So we got a touch there, right? And we got some FVG there, right? So our price came, it closed that FVG, coming back to this order block that is there, right? So the moment we have some FVG with the BMS that are there, this FVG, so they just come, they close that FVG, check the order block that is there, because that I previously explained of that candlestick, that week's that previous high, right? Taps that zone, then we go down, right? With some FVG there, they pushed up, they closed it, mitigating this order block. So our market is balanced all the way from this high, right? Then on this point, right, I want to explain something on this point, right? That's what I wanted, right? So on this point, you realize that there is some imbalance that was actually left by price, right? So I know in the future that price actually has to come and close this FVG, right? So you might realize that this trade might just come down, right? How I project, I'm just showing you how I project my trades, right? Since we're in this sell, price might just come to this point, close this FVG, tap on this point, then come to close that. After closing that, it will be mitigating this order block, right? So after mitigating that order block somewhere there, it then pushes downwards to where I will show you where price intends to go there. You will check this setup in the future and you understand, right? That's how I analyze my charts, right? Then the other thing is a concept that I've explained before of liquidity, right? There's some trend line liquidity that price will have to come at some point and close, right? At the same time, closing this imbalance, mitigating that order block. I don't think that price will come to this size. It will just come close that. If balance tapping this order block, then it will continue going down, right? So from here, I know this journey will continue all the way to the downside. And where exactly are we most likely going to come? So from here, I've explained all the FVGs that we have there all the way up to this point, right? So if you look at all these ones, right, you will say I didn't explain. If you look at all these ones, right, that we have there, they were closed, right? All the imbalance, they were closed, right? So we no longer have a place or a zone of inefficiency, right? Or a zone where we have an FVG. The other zones that we have, I've covered it by this move. The price will have to come here. That happens to be this one. Right? We have another FVG that we have there. Price will have to come and close it eventually on this move all the way to closing that one, right? So I want to show you the projection where we are most likely going to take. Remember, on this trade, we have taken our profits 238 pips. That is too good, right? But I'm just showing you the long-term, right, movement of this gold, where it's most likely going to go, right? Because we're in a downtrend, we've gotten a torch here, even on the higher time frames, right? So let me show you there, right? So I've also explained that this one, right, this one was actually closed on this one, so we're cool with that, right? But you're going to realize that we have another FVG that is sitting there. For me, I don't stress. Why? Because I have an indicator that shows me that, right? And if you look at this FVG, right, it was tapped and we got a buy, right? I'll also explain the concept where we use the FVGs for entries. Right? It was tapped, we got a buy from this one, then it was fully closed. So this one, it was done, right? Then let me zoom a little bit to the left. You realize that we have another FVG that is there, right? In the future, right? In the future, right? Or where our price is currently sitting at, you get some ideas or some trades. You see, the moment they close that FVG, we got an up move there, right? So for scalpers, that will be an easy buy that we have gotten from that point, right? I'm just giving you ideas of how to use these imbalances. They are not there just for decoration, but they're there to be used by traders to make money or to make profits in this market, right? So I'll go to the last one, right? I'll go to the last one that I have there. Sorry for the size of my chart. It's a little bit small, you may not see clear, but then it's this one. So we know that from this low, right, price is to come back to that low. If I zoom in my chart, if you look at it on the higher time frame, you see that the key high or the strong high that we created here is this one. So it means that this is a higher time frame BMS that was broken. So our price intends to correct. This is a correcting move, that's why it's slow. It's correcting all the way to these demand zones, and below or just above, above that demand zone, we have an imbalance or an FVG. So our price intends to come to close that FVG. So that's the journey of this move. Our price is in a journey to close this imbalance. That's where we are heading with this move, right? But before we come down there, I anticipate that my price first of all is to take my target there, then we move up. I'm going to take some buy trades from there. After closing that, we come and close this one, we need to get that order block. Then we start coming down with this move all the way to close this imbalance, right? So all the imbalance that you have to your left side is for some use, right? It will give you some good trades. Then from this point, that's when gold is most likely going to continue in an upward trend, maybe to create some new highs above 2000, right? So I believe this video was very, very helpful. I believe what I've just explained is very, very helpful. You find it useful and you use it in your trading, right? If you just come to the higher time frame, you're going to realize that your chart had a BOS, right? We had a BOS here, meaning that this is a demand zone, and we have some FVGs on the daily time frame. They're actually clean. These ones, they have to be closed. So our market is in this journey to come and close these imbalances. So it's going to come close those imbalances, then we are going to move to the upside. But the journey is going to happen in this manner, right? So you check this video after some days, after some weeks, and you actually appreciate this concept much better. So this is how we project a Sniper X. This is how we take our moves and become more precise on our entries, and this is how we get our sniper entries. So thank you guys for watching this video. If you're not subscribed to this channel, if you're new to this channel, remember to hit the subscribe button and the notification bell so that whenever I upload, you're the first to see my content, right? Also remember to share, like, and comment in the comment section. Thank you guys for your time. See you.